Let me show you something most traders never see in their entire careers. This is a normal price chart. Candles going up, candles going down. Looks simple, right? But underneath these candles, there's a whole hidden layer. A layer that shows you who is actually buying, who is actually selling, and what big players are doing with their money in real time. It's called order flow, and it's the closest thing in trading to seeing the other guy's card at a poker table. Once you see how it works, I promise you'll never look at the chart at the same way again. Now, I know what you're thinking. This sounds complicated, but it's not. I'm going to explain the whole thing in simple terms in a bunch of minutes. By the end of this video, you'll understand the 3 signals professional futures traders actually watch. The same signals that separate the people who consistently win from the 90% who keep losing. And at one point, I'll walk you through a real setup, step by step, so you can see exactly how it plays out. Stick with me, because that part changed everything. Let's get into it. Here's the truth nobody tells beginners. Most traders lose. Not because they are dumb, because they are looking at the wrong information. They open a chart and pile on indicators, RSI, MACD, moving average, Bollinger Bands. The screen ends up looking like a Christmas tree, and every single one of those indicators has the exact same fatal flaw. They're all calculated from the price that already happened. Think about that for a second. You're making a decision about the future using a tool built entirely from the past. It's like trying to drive a car at full speed while only looking in the rearview mirror. You can see exactly where you've been. You have no idea what's coming. Here's what happens to the beginner. Price drops to a support level. The indicators flash buy. They jump in, and then the price slices straight through and keeps falling. They just got faked out. Again. Why? Because the indicator only told them what already happened. Couldn't tell them that big sellers were still dumping under the surface. Order flow can. Because order flow isn't about the past. It's the live feed of every buy and sell order hitting the market right now as it happens. Price is the result. Order flow is the cause. And when you learn to read the cause, you stop getting faked out. I'll prove it to you in a few minutes. Remember that. The proof is coming. Let's start with the first tool, the footprint chart. A normal candle only tells you 4 things. Where price opened, the high, the low, and where it closed. That's it. 4 numbers for an entire chunk of time. You're basically reading the headline and skipping the whole story. A footprint chart shows you the whole story. Inside every single candle, it shows you how much was traded at every price. And this is the key part, whether those trades were aggressive buyers or aggressive sellers. Think of it like the receipt from a busy store. A normal candle just tells you the store made money today. The footprint shows you every item sold at what price and exactly who was lining up to buy. Green numbers mean that buyers were stepping up and lifting the price. Red numbers mean sellers were hitting it down. Suddenly, you're not staring at a colored bar, guessing what happened inside it. You're watching the actual fight between buyers and sellers tick by tick. That alone puts you ahead of almost everyone else looking at the same chart. Tool number 2, Delta. It sounds technical, but it's the simplest idea in the world. It's a tug of war. On one side of the rope, you've got the aggressive buyers. On the other side, the aggressive sellers. Delta just measures who's pulling harder. More buyers pulling, delta is positive, and price wants to rise. More sellers pulling, delta is negative, and price wants to fall. Easy. Here's where it gets powerful, and where the pros quietly make their money. Sometimes price is grinding higher. Candle after candle, everyone assumes buyers are in control. But you check the delta, and the sellers are actually winning the tug of war. That means the move up is running on fumes. The buyers look strong on the surface, but underneath they are getting overpowered. 9 times out of 10, that's a quite little mismatch, is the warning shot before a reversal. The crowd sees green candles and buys the top. You see negative delta and you wait. That's the edge. Now the big one. The concept that once it clicks, genuinely changes how you see the market. It's called absorption. Picture a fire hose blasting water at a brick wall. Massive force, water coming with everything it's got, and wall doesn't move, not an inch. That's absorption in the market. Imagine a wave of selling it, tons of red, sellers dumping everything they have. By every normal rule, price should collapse, but it doesn't. Price just sits there, refuses to drop. Ask yourself, if all that selling is hitting the market and price isn't falling, who is buying all of it? The answer is somebody big. While the crowd is panicking and throwing their position away, a large player is quietly standing there with huge buy orders, soaking up every share like a giant sponge. And here is the beautiful part. Once that selling pressure runs out, and it always runs out, there's nobody left to sell. The dam breaks. All that energy that couldn't push price down snaps the other way and launches price up. Heavy selling that fails to move price isn't weakness. It's a loaded spring. Absorption. It's where the best reversal are born. I promised you a proof. Here it is. Let's put all three together in one real setup. Picture this. Price has been falling hard whole morning, dropping straight toward a major support level. A price where it's bounced before. The crowd watching candles is panicking. It's breaking down, get out. Classic. But you've got the order flow open, so instead of panicking, you watch. First thing you see, heavy selling. The footprint is glowing red. Sellers are throwing everything at it, and delta is deeply negative. On the surface, it looks terrible. But then you notice the thing that matters most. Price has reached support, and it stopped falling. All that selling, all that red, and price is holding. That's your first clue. That's absorption. Somebody big is soaking up the panic. So you wait. You don't jump in yet. You let the seller exhaust themselves against that invisible wall. And then it happens. The delta flips. Green starts pouring in. The buyers who were quietly absorbing now step on the gas. Price lifts off spurt and start climbing fast. The candle crowd that sold the bottom in a panic just got faked out again. You saw it coming, not because you guessed, but because you watched the cause instead of the result. So let's lock in the receipt. 3 steps. 1. Heavy selling pressure. Price refuses to break. Delta flips back in your direction. When those 3 line up at a key level, you've got one of the cleanest reds in all of trading. Now, I'll be straight with you. Reading these live in real time takes reps. You're not going to master it from one video. Nobody does. The biggest mistake beginners make is trying to trade real money the second they learn a new concept. Don't do that. The second mistake is forcing trades when none of the 3 signals are there. And the third is staring at order flow on every tiny wiggle instead of waiting for the clean setup at key levels. The fix for all 3 is the same. Practice the read before you risk a single cent. That's exactly why I put together a completely free order flow course. It walks you through all of this with real setup step by step until reading order flow feels natural. It costs nothing. It's the first link in the description. Go through it right after this. Here is something genuinely surprised most beginners. To trade futures with order flow, you do not need a big pile of your own money. Most serious traders I know aren't risking their own capital at all. They use a prop firm. Here is how it works in plain terms. You take a simple evaluation to prove you can trade without blowing up. Few bucks. You pass it. The firm then funds you with their capital. Far more than most people could put themselves. You keep the profits. They cover the losses. You bring the skill, they bring the money. Futures, traded with order flow, is exactly the disciplined, rule-based approach these firms are looking for. It's a perfect match. The second link in the description is the future prop firm I personally use. Not a scammy one, but the best one used by professionals. Practice the concept first. Get comfortable, then go and get funded. Before you go, some real talk. Because I respect you too much to hype this up. Trading futures involves real risk, and most people who rush in lose money. Do it the smart way. Learn to read first. Start small and treat it like a skill you're building, not a lottery ticket. And just so it's crystal clear, this is education, not financial advice. If this video made order flow finally click for you, do me one favor and subscribe. I break down a new concept exactly like this in every video, and I don't want you to miss the next one. Now go practice, and I'll see you in the next video. Bye bye.